Hello traders, good morning. This is Yanis. I'm welcoming you once again to the new trading week predictions and suggestions for the week starting February 28th. Without any further delay, we are going to start with the euro dollar. The euro dollar was in a bearish mood last week. We had a violent breakout of the range that the pair was confined within. It seems now to have bounced back again between those two areas. We had highlighted 113.50 and 112.50, which is give or take 100 pips range. This is the inner range of the move that the euro dollar is doing right now. The outer bigger range obviously is between 114.80 around here and 111.20. Okay, so we are within a roller coaster between these values, and this is why, despite the fact that last week the pair did provide a good short, again, I would consider staying on the sidelines and not trade the euro dollar. However, that's my personal suggestion to you guys. But what I will be looking for personally will be to short the trade. Okay, I want to take advantage at the end of that breakout to the downside. And right now, what I would like to be planning would be a short around that area here. You see where pair has reacted many times, around 113.20-ish. And at that time, that will also be very close to the 200 moving average on the 4-hour. And both that level, the 113 something, and the 200 moving average should serve as a difficult resistance for the euro dollar pair to break above it. Okay, and that combines also with that purple area, the 113.50. So I would like to buy, to sell that pair cheaper. And what I have in mind as a plan for upcoming week would be to wait and see if price will be able indeed to get back up to those levels. And then I will be waiting for a bearish engulfing candle that would confirm that now the pair could be in a position to resume its previous downtrend and get much lower. Okay, so if I manage to have that scenario correctly, I will be able to sell at a very good price with a relatively close and tight stop loss, while my reward would be substantial, since my trade will be giving me more than or around 2 as a win to reward ratio, which is great. And from there, that doesn't mean that I will close my trade. If price gets back down here, I will again wait for price to show me if it has the ability, if the bears have the power to push that pair lower, in which case my target would be around the 111, 110.50 area. Okay, but that's just my plan. That's what I'm planning for upcoming week. I'm not really interested into trading that pair long should it continue up to those areas here. It might bounce off the 220 and resume its downtrend. So you need to be aware of that scenario as well. That would be another short scenario if price seems to be reacting to the 20 moving average at the opening of the market. But again, like the previous week, okay, everything is dictated on an hourly basis almost from that conflict between Russia and Ukraine, where the United States and Europe is involved as well. Basically, the entire world is involved in that conflict. So anything can happen at any given time. If Russia manages to take down Kiev, for example, then the dollar will lose, the currencies in general will have the tendency to drop, and gold and oil will appreciate extremely. If there's some kind of sign that solution may be coming, or all parties would be willing to find a solution to stop that atrocity and that crisis and that war, then things will be better for most currencies. So anything and everything can really happen, and that's unfortunately dictated mostly by the fundamentals, which are the news, outside the technical analysis that we are doing. So we are trying to combine the best of both worlds right now and try to understand and get a personal bias on the currencies and on how the instruments could be moving for upcoming trading week. Okay, so you keep that in mind. It's extremely important. Do not get overwhelmed by all the news and everything, but everything will have an impact on the currencies as well. So having said that, again, for the euro, my personal suggestion, especially for new traders, stay out for the moment. My plan for upcoming trading week would be to wait for a retracement where I explained around that area, the 200, the previous extremely important resistance level, and wait to see if the pair will have the power to break above or not. And in that case, I would be mostly willing to play the short side of that rejection rather than a break above, which can go to the descending trend line and then resume in the downtrend, or might as well go to the previous highs around 114.80. So the upside is more difficult for me in my mind. It does have more variables that need to be tested rather than the downside, which is more probable, at least for me in my mind right now, given the present circumstances. Okay, so moving next to the pound dollar. Okay, we do have here on the pound dollar two scenarios as well. It's normal that many currency pairs will have the same or a similar way of moving. For the pound dollar right now, my personal bias will be that short will continue. For me, the pound as a currency is slightly weaker than the euro, for example, and we know that the pound and the euro could have the tendency to move into the same direction. However, right now the pound is for me the weaker out of the two currencies. And the reason why it's weaker is probably because, again, due to the fundamentals and due to the reaction where Britain was one of the first countries, if not the first one, to react to that war and try to impose some sentences to Putin and to Russia. If the crisis continues and escalates in favor of Russia, then the pound will take a much harder beating than what the euro will. So this is why for me, right now, the pound is weaker than the euro. So having that in mind, and this is why my personal bias for that pair for upcoming trading week remains bearish. It could move further up to that descending trend line or meeting the 20 moving average before resuming the downtrend. So if that happens, if at the beginning of the week you see the pound dollar pushing higher and getting around that area, the 20 moving average, and potentially even to the 135 area, the previous difficult to break resistance on the up, on its way up. Okay, so that could be an area of interest for the traders to consider short positions as well. Okay, but you'll have to wait. You'll have to wait for, first of all, for price to get back up to that area, and then wait for statement from the bears with an important engulfing bearish candle that will basically confirm that now the pair would be able to continue on its way down. So that can be one of the scenarios. Okay, in that case, if price moves up, then I would be waiting for a rebound somewhere here. And in that case, obviously, the target would be here. The first target as at least, okay, would be here in the 133.40 area, which are the previous lows. You would get an excellent risk to reward ratio in that case, assuming that you have an entry here. Short, okay, you could use a very tight or a tighter stop loss somewhere above the previous resistance. And in that case, your target would be here. And as you can see, we have a trade of almost 5 as a risk to reward ratio, which is more than excellent. Okay, so that can be one of the scenarios that can develop to go short. The other one can be an entry immediately at the break of those previous lows. Okay, and either going directly to the target on its way down, or just try to retest that area of resistance now once price breaks below it in the whereabouts of 133.25. Okay, and in that case it will retest it, and again you will wait, and you should wait for a bearish engulfing candle to confirm that now the downtrend is about to resume, and in which case you will have your target. Okay, so the short scenarios can be played in 2 or 3 ways. We always leave price to drive us and to drive our decisions, but that's the plans for a short scenario. Now, for a potential long scenario, I wouldn't be looking for any kind of longs. Of course, intraday you can try, if you see the breach of those highs here, going down to a lower time frame and try to play that long intraday, but you will have a lot of obstacles on its way up. The 20 here on the 4-hour, that area which is extremely important, then the 200 moving average. So for me, the path to the upside is paved with a lot of obstacles, and so far I wouldn't, sorry for that, I wouldn't consider it before I do have a clean break above all those previous highs. Then I would be expecting price to get back down slightly to retest them before pushing up to my target on the upside. So no long scenarios before we get price around 136.50 should be considered, okay? And this is why I'm favoring any one of those 2 or 3 short scenarios I've described here, okay? So that's the plan for the dollar, for the pound. Moving next to our third pair, the dollar Swiss. My personal bias remains right now to the upside for that pair. I'm not really considering anything short unless I see the price, the commodity moving below 191.80, 091.80. Okay, so my scenarios right now remain bullish for that pair. The way I would like those scenarios to play is that move back down here should or could react to that first level around 0.9240, and then through a bullish engulfing candle push to my target, which would be the 0.93 area, at least to start with. The other scenario I would consider for a long entry would be the break of the 92.40 level support, okay, which would serve as a resistance, and eventually the pair would continue its way down to meet either the 200 moving average or the 0.92 level, which is extremely important. A lot of clustered support will happen here. So moving through that level will be extremely hard. Okay, so I'm prepared to see that retracement get a bit deeper towards the 200 moving average and the 0.92 area before pushing back upwards. Obviously, in that case, keep your eyes on the 0.9250 level, because then if it serves as a resistance, you will have a rebound to the downside, and that would annulate the long position, okay, and eventually confirm now a change of the direction for a shorter bias, at least on a short term. So those are scenarios that I've planned for my trade for the dollar Swiss. Okay, again, we can have an immediate rebound on the 0.9250 level. We may have a deeper retracement where the confluence and the cluster created by the 200 moving average, the 20 moving average, which would also be somewhere in the whereabouts, those trend lines and that purple area, extremely important support at 0.92. Okay, I would expect that level to hold, and then I would be waiting for a bullish engulfing candle to show me the way to the upside. Okay, I'm not again considering anything to the downside unless that retracement proves to be more than that, in which case we will have a close below the 0.92 level, extremely important level, extremely important area. Okay, and in that case I would be waiting for price to retest it and then a bearish engulfing candle to push a potential short to the downside, and the target, which would be in that case the 0.91 area. Okay, but again, I'm having my mindset to the upside, at least for the moment. And if there's no break and close decisively below the 0.92 area, then those scenarios will remain in play for me, and I will be looking only for long positions for upcoming trading week. Let's move down to the fourth pair, to the dollar yen. Okay, the dollar yen right now remains, again, I've said it last week, I'm not looking for anything long before we get around the 116.30 area and it's taken out. Okay, and it's an extremely important area. So I'm not looking for anything long on that pair right now. To the contrary, despite the fact that we are on the 4-hour trading above the 200 and the 20, which is a red flag to go short, okay, because we know that these moving averages will create a dynamic support area if the bulls are able to take control. So I will be looking for that reaction, but right now I'm looking for an immediate short, which will put me in the driver's seat until price gets back down to the 20, to those previous lows. The trade should be in profit by then, and that will give me the time to evaluate more closely how price will behave and react to those areas, and if it will indeed continue its path to the downside. Okay, so worst case scenario for me, and this is why I'm looking for a fast entry right at the beginning of the market in the direction of a short. Okay, it's to get into the driver's seat and get some profit before getting to the point where I will have to reevaluate my short position eventually. Okay, so keep that in mind. Immediate short for me at the beginning of the trading week. We'll see how things are. That gives me a nice risk to reward ratio if everything goes as planned. Tight stop loss from my entry, and my target initially would be the 114.50 area, those previous resistance or support level here at that range, at that price range. Okay, but like I said, I will have my eyes wide open to watch for any potential reaction on the moving average if the pair moves its way down. Okay, and then I will see if I can either trail using the 20 or trail using a couple of bars if price action shows me that the bears are in control and they intend indeed to push the pound, the dollar yen more to the downside and reach the 113.80 area, which is for me the next potential target. Okay, moving to the next pair, the Aussie dollar. My personal bias for the Aussie dollar is long. Okay, I will be waiting for a break of those previous highs here and enter long. Again, I would like to try and be in the driver's seat as soon as possible because I may have a reaction on the previous highs. Okay, and in that case, an early entry would provide me with a better condition to evaluate my trade, which will be in profit at that time around the previous highs. I'm not really expecting them to hold price a lot, so this is why my target is actually for that pair is way above, is around the 0.7480, 90. But of course, that area 0.7350 is to be considered the first target for that long trade. So actually, I would have to adjust a bit what I've done here. Okay, if you guys want to be more correct, that would be my first target on the break of those previous highs. Okay, and in that case, my stop loss would be somewhere here. Give me a good 1 to 1.5 risk to reward ratio. Okay, that's more like it actually. But I will, like I said, I'm not expecting those highs. If things goes as planned to the upside, I'm not expecting those highs to be a problem. So the next immediate target would be here. And here I will be waiting to see how much of a reaction will we have. Now I do have another plan and I do have another scenario, but that involves price getting way further to the downside, actually breaking the 0.7050 level. Okay, and then even then that's a huge support here, huge. The 0.70 area is a very big support. So to the downside, I would be willing to play it if I'm having a close below my 200 moving average, okay, on its way down, or even below the that area, and then I would be waiting. Allow me, I forgot the upside. Okay, the upside is just a straight up condition for me. The scenario to the downside would imply that we have some kind of reaction here, and then a retest of the 0.72 area, which is somewhere around here, and that ascending trend line. And in that case, then I would be having my target, which would be somewhere here. So that for me would be the alternative short scenario to consider. Okay, in that case, 72 round number and important area is and remains the key for the downside. Okay, and again, that will be if at the beginning of the trading session of the trading week, price doesn't push immediately higher, and in that case directly to my target for my long trade. Now, getting back to the next pair, the dollar CAD. Okay, the dollar CAD was bullish and still remains bullish in my mind. Okay, if you look at the longer time frames, they are extremely bullish. We do trade above the moving averages on the daily, on the weekly. Okay, we did make a higher high compared to the previous highs. However, we still remain kind of confined in between 126.40, which is a huge level of importance, okay, a huge area that has to be evaluated correctly, and the 128.50 area here where price reacted. And it seems that on the daily and on the weekly, the bulls lost the control of that upside. And despite the fact that the mid and longer term bias for me for the dollar CAD still remains right now as we speak bullish, okay, it seems that the bulls lost that key area of 126.50, and they lost it with a great statement from the bears. Very important bearish bars on the daily, and the weekly closed in the same way, so very aggressively, okay. But as with always, whenever there's aggression and there's a move in almost a straight line, then you can expect the equivalent rebound to the opposite side. Okay, I'd rather see the retracements go into those zigzags before creating lower lows and lower highs, okay, instead of just a straight line to the support areas here. So for me, the first bias right now is short, okay. However, it is short, but as you can see, my short is initiated below the 126.40 area, not immediate short. And the reason why, it's because I want to wait for that cluster of support to tell me if indeed that will serve as a support for the dollar CAD, or if the bears will take control and break that support, turning it into a resistance. So I'm not entering any kind of trade as the market opens, but I'm evaluating both scenarios. So the first one, my preferred one, but I'm not against the long either, okay, would be to wait for price to close below the 126.40 area, get back up to retest it somehow, and then a bearish engulfing candle would be my entry to the downside. In that case, your first target should be in the whereabouts of 125, which is a round number and an important also area. But if the bears manage to break that 126.40, then personally I would be looking at 124 as the immediate next target after 125, okay, and that would confirm a change of direction to the downside. So for me then the dollar CAD would be more bearish than bullish, okay. So to give you a quick recap on that pair, first personal bias short, but waiting for price for the bears to show me that they have the power to break 126.50, get back up to retest it, and then next target is at least 100 pips lower, around 125. Okay, second scenario that I'm willing to play with that pair is the continuation of that mid and longer term bullish scenario. In that case, I would be expecting this to be a retracement, and I expect it to react anywhere around 126.80, 126.70, 126.60. Okay, you know that trading is not an exact science. That's why I'm talking about areas. And for me to go long, I would want to see a reaction of those areas of interest, of those areas of extreme support, and seeing a bullish engulfing candle after that move straight back down would be, for me, the sign that the bulls are ready to take control, and that would be my entry at an excellent price for a first target around the previous highs, 128.50. Okay, but that will give me an excellent risk to reward ratio because my stop would be somewhere in the 126.25 area below all that cluster of support. Okay, and that would give me an excellent risk to reward ratio somewhere around 3 in that case. Okay, and yet again here would be simply a level to watch. It doesn't necessarily mean that you will have to close your trades. If that scenario materializes, then we would be looking at a much higher target. Should we stay in that trade, okay, price would break above the 128.50, get back down slightly to retest it. At that point, it should serve as a support before pushing up further to the 130 mark. Okay, but again, that remains to be seen. We don't have anything yet. We trade what we see and we trade what we have planned. Okay, we don't have to guess. It's the best way to lose your shirts if you start guessing in that game. These are not guesses. This, what I'm showing you, is trading plans which we want to apply should price behave in the way we have planned. Moving up to the last pair that we are going to have a look at is obviously gold. Okay, gold did have that reaction very close to the 190.90 or the 2 round level that we spoke about. We had identified, as we have always. As you can see, I'm not retracing or redrawing those areas of support and resistance. These are drawn from higher time frames, and as you can see, week after week after week, they do prove themselves, no matter the direction of the pair, as quite useful landmarks for your trading. So we had identified that area in the 1950 level of gold. Price reacted immensely. The bears made an important statement. They went through the 20 moving average just like butter. There was a slight reaction there, and the pair is continuing its move to the downside. Okay, so for me, I would go for an immediate short right now on gold. Try to again to gain the advantage of being in the driver's seat immediately. I'm kind of afraid of that level of the 1870 mark for gold, but because of that push of the bears going through everything last week, I'm kind of hoping right now that the short scenario should materialize if we have a break below those lows, and will allow me to be in the driver's seat and be in a positive position before getting tested to the next target or the next major support area, where again we will have the cluster of the 200 moving average and the 1840 level, which serves as static support. So for me, that would be the first scenario I would be looking for, an entry just below the lows of the previous candles if at the opening of the market price goes further down. I will have my mind set up on a potential reaction here. Hopefully I will not see it, otherwise I will probably cut my short loose earlier than the stop loss, which is here. Okay, so if I see a reaction here, then I will probably cut my short manually. If not, then I would be expecting it to go to the target. Now, if it goes to the target, and because of the cluster of reaction that we will have here around the 1840 for gold, then I would expect it a very good retracement for the pair to continue its uptrend. Okay, and this is why my long scenario doesn't start anywhere near here. Could it go? Yes, obviously at the market, as the market opens, we could have an immediate reaction to the upside, and we could have a long that would go immediately to the previous highs. Okay, but I'm okay with that. I mean, if that happens, then that happens, and I will be out of it. I would be on the sidelines. I don't really care. Like I said, my plan is to go short. I'm kind of perplexed here on that area, which seeing not holding much. So I'm confident that my target will be hit. But if that scenario materializes, then I will have my mind set to the upside. Okay, and the reason is because of that cluster of support here, and because I'm pretty much sure that if we measure that move from here anywhere to here, okay, that you see that we are in the whereabouts, or we will be in the whereabouts of 0618 or something more or less, give or take. Okay, so everything is pointing to a potential reaction once we get here to the upside. And this is why, sorry, I deleted my short trade, and this is why I'm looking for a long around those levels, around 1840 ish. But again, like I'm always telling you, okay, it's not a level where I will enter long immediately. Even if price ranges a bit here, I will be waiting for price to show me that the bulls are in control. So that means that I will wait for an engulfing bullish candle that will engulf more than 2 or 3 or even more previous candles if we are in a range at that level, okay, before I commit to any long position. Because what can happen here, because of that support, is that we can be and we can stay in a range going up and down to the 1840 level of gold, and then having a break to the downside as well. Okay, so unless I'm having a confirmation with a bullish or bearish candle, depending on the direction, which would engulf most of the previously ranging candles, if we do have ranging candles, then I will never commit to any long or short trade before seeing that. Okay, and that's the mindset that you guys need to have, and that's the way you should be approaching your trades as well. Always wait for price confirmation. So this is my personal bias and my personal outlook for gold. For upcoming trading week, I'm expecting the short to continue down to that area. I want to be in that short as soon as possible, so I will be waiting and willing to wait for a breach of those lows here before entering. And then I will be aware that here is an area where I may be wrong and price could resume to the upside and the uptrend could resume. In that case, I will cut my short sooner, and I will be waiting. In that case, I won't be entering long probably. Okay, for me the long scenario is that one, is I would like to see the retracement to the 1840 area, and then after having price confirmation through a bullish candlestick pattern, I would enter long at a very good price, a tight stop loss, and a very good risk to reward ratio. The first one would be around here, around the 20 moving average, but the truth is that I would be aiming for the previous highs, giving me a risk to reward ratio over 3. Okay, but even if you do keep more moderate your trades and you keep it to the previous support area, which would serve as a resistance here, which is the 1900 mark for gold, okay, you're still in a very good risk to reward long trade. Okay, so thank you for being with me for that outlook on the new trading week that's coming up. I'm hoping to see you all next week for the next outlook. and I'm wishing you all an excellent trading week. Take care of yourselves. Stay safe.